Mr. Trichet, there's a lot of talk about whether the euro is just too high. I don't know at what point it becomes problematic, but there was a warning shot from the ECB chief economist saying, like, look, this could mess with monetary policy. Does it?
Yes, I think, of course, that it is a very, very important element to consider. The euro went up vis-à-vis the dollar and many other currencies by around 12% over a certain period of time. And the Europe and the euro area does not need that, of course, taking into account the difficulty of the present situation, the difficulty of the recovery, and also the fact that in comparison with the US, we have a growth and a catching up process after and in time of pandemic, which takes time, and we are not in the best situation possible. So I would say beggar thy neighbor policy is never appropriate. And I am a little bit hurt, not by the Fed itself, because the language of the Fed is very, very prudent and cautious in terms of exchange rate. But from time to time, the executive branch in the US is talking down the dollar, which is absolutely inappropriate, obviously. There is no place for a beggar thy neighbor policy in a situation where we are, and I hope that they will be as responsible as possible. I'm speaking of the executive branch of the United States.
But, Mr. Trichet, what is a level that starts becoming really uncomfortable for euro?
So I will not pronounce any level. Say that plus 12% is a big change. In my predecessor and myself were commenting such move. I qualified themselves as brutal myself, I remember, which created some emotion. But I really think that what we need is calm, stability, and certainly not talking down the main currency, which is the dollar, which is not at all appropriate, as I already said.
And you were very clear in your comments, Mr. Trichet, but you know, from here, given the Fed policy, will dollar actually weaken even without that rhetoric from the executive that you were talking about?
Well, I must confess, I expect the first, to the extent that there is a dimension of the exchange rate which is associated with the recent decision of the Fed, I think it was totally overdone by the market. I mean, the Fed only said, we will, if we do not get out of the present situation, we'll continue to have an accommodating policy. But the accommodating policy of the Fed doesn't mean negative interest rates. And in Europe, you have negative interest rates. So the fundamentals are below all the noise that we are hearing. In my opinion, there is a very good case for certainly not changing the dollar-euro position based on the recent decision of the Fed. I don't think there is really a case for that, and I'm sure that the market will realize that there is no case for that.
Well, Mr. Trichet, it's Kaylee in New York. A stronger currency can be a hindrance for inflation. And already data showed us yesterday consumer prices in the euro area falling for the first time in 4 years. How big of a problem does that create for the ECB?
Well, the problem of the ECB is more or less the same as, I would say, in all major central banks. Of course, we have inflation which is much too low. That inflation which is much too low creates two problems. One problem is that we have a risk of materialization of deflation. And of course, this is an ultimate risk that we must avoid. And second, of course, it calls for very low interest rates, which themselves have their own drawbacks, particularly if you are in a time when you need more accommodating policies. So all taken into account, it is the situation of major central banks. The ECB has to cope with that situation. And it seems to me that it does it as well as possible. I would say my successor is doing as well as possible, and the governing council is doing as well as possible. But the situation is demanding. And that's the reason why precisely we don't need at all a change in the overall condition that would be conducive to less growth and less activity in Europe.
Right. Mr. Trichet, given the Fed's move last week with this move toward average inflation targeting, does that add some pressure for the ECB to follow the Fed's blueprint on that front?
Well, first of all, the review has started in January in Europe, and it will take a little time. I would say that seen from the European perspective, the idea of judging on the average inflation, meeting the objective, is something which is natural in Europe. Myself, I remember going to various capitals, including Berlin, for instance, in my time. I was claiming that we were up to our responsibility when we were delivering more or less 1.9% average since the setting up of the euro. So it was natural in Europe to reason on an average basis. And I would say that also the fact is in Europe, in principle, we consider the headline inflation as the inflation that you must look at because it's the inflation that our own fellow citizens are seeing. The core inflation is a different concept which is not seen by the general public. So, of course, if you are following headline inflation, it goes up and down, and you have necessarily some kind of averaging to operate. But all that being said, we will see what the ECB will do. What reassures me in a way in what has been decided in the US is that the 2% reference was not abandoned. You remember some academics were recommending to go down to 1% or even 0%. Others were saying 4% is much better. I'm very happy with the 2%, which is, by the way, the reference in the US, in Japan, in the UK, and in the ECB, which was the first, by the way, to mention the 2% as a very, very important reference. So the fact that all central banks, including, I have to say in many respects, Bank of China, have this kind of reference in mind is, in my opinion, helpful in terms of global financial stability, global monetary stability.
Monsieur Trichet, when you look at the specter of deflation, we started, lockdown, looking at all this stimulus and thinking it could lead to very strong inflation, maybe even rampant inflation. Is the risk now, deflationary hold and actually Europe becoming a lot more like Japan?
Well, again, what we know in all advanced economies is that Japan was very much ahead of the other major economies, but we all are in that situation, which was very well summed up by Jay Powell recently, namely, first, we have a growth potential which is significantly lower than before. Second, we have real interest rates, equilibrium interest rates that are much lower than before. Third, we have inflation, which remains extremely low and abnormally low for all reasons, and particularly the two reasons I mentioned, the materialization of potential deflationary risk and the too low nominal interest rates that are, I would say, engineered by that situation. So that is the situation in all advanced economy, and it calls, of course, for getting out of that situation. The central banks are doing all what they can, in my opinion, even being much bolder than what was foreseen, and in particular the ECB with the pandemic emergency purchase program proved the capacity to react to extraordinarily difficult situation. But I mean, the problem is to fight the pandemic at the present moment. As soon as we have fought successfully against the pandemic, we will have the problem that we had before the pandemic. And the problem we had before the pandemic are the problem that we just summed up. So we will see exactly how to get out. In my opinion, we will get out of that situation, but with the help of other partners. The central banks alone cannot change the growth potential. They cannot change the real neutral interest rates or equilibrium interest rates, and that is the responsibility of other partners. And of course, we have the main problem of the Phillips curves, and there I could elaborate on that if we have time.